Welcome back to another episode. Today we're going to take a closer look at Roblox. The company just reported earnings and unfortunately the stock price is down roughly 18.8% as I am recording. It definitely seems to be a very scary time for the overall market, and I do want to say if you kind of stuck it out through this crazy market that we're seeing, I do believe in the future you are going to be happy that you're investing at these levels. I know sometimes it might seem like, hey, this is the worst time to ever have money in the market, but if you are a net buyer, I do believe that long-term opportunity is super high for the market where it's at right now. So best of luck. I know it seems to be very scary. I don't want to ramble too much, but I'm just saying, hey, I'm here with you. I'm also taking a beating in the market, but I do believe in the next few years, this is just going to end up looking like noise. And I'm going to be like, Jose, this was a great time for you to keep putting money in the market. And I'm happy I did. So enough rambling with that. Let's get started with today's episode.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So I know the stock is down dramatically today. Like I mentioned, almost 19% down for the day, and year to date is down roughly 67.9. The company did report earnings and they did report a bigger loss than previously expected. On today's episode, I do want to talk about some of the bullish thesis behind this company right now. I know certain investors might be looking at Roblox and saying up only 2% year over year. See, I told you Roblox is definitely not a growth company. I do want to say when taking a closer look at a gaming industry, especially a company like Roblox, where a lot of their products are net digital items, what's very important is bookings instead. Bookings were up 10% year over year and was up 15% year over year on a constant currency basis. Some other bullish points is this company is positive in cash flow from operations. Unfortunately, they are investing a lot in infrastructure that their free cash flow was negative. We can see average daily active users were 58.8 million, up 24% year over year, and hours engaged was 13.4 billion, up 20% year over year. So there are some definitely bullish thesis behind Roblox at the moment. So like we saw earlier, Roblox reported a bigger loss than previously expected. And one of the main reasons we can see in this chart right here, personnel costs have increased. Main reason is headcount. Headcount this quarter was 2,100 compared to 1,900 last quarter and 1,500 a year ago. And this is excluding stock-based compensation. So some investors might be super kind of aggravated that a company like this is using a lot of stock-based compensation to kind of keep this personnel happy. Taking a closer look at more of the GAAP expense, we can see this has ballooned a nice amount compared to the same time last year. In this quarter, it was roughly 817 million compared to 586 million a year ago. The biggest kind of growth has come in research and development, again most likely personnel, infrastructure, trust, and safety as well is seeing a nice growth overall in cost expense. Overall, this is causing the company to actually take a huge loss in GAAP income compared to a year ago. Now on the bullish side, I do want to say there's numerous bullish points. First, that booking up quarter over quarter, and it is up year over year as well. We can see that right now we are definitely seeing a bit of headwinds in the consumer market, but bookings is still pretty impressive for Roblox. It hasn't hit its peak that it hit in the fourth quarter of 2021, but remember that fourth quarter is the holiday season, so we might have to see how this company does in the upcoming quarter. Will there be some year over year growth, or was last year the peak for them, at least in the short term of things? Even though we've seen that revenue grow year over year, unfortunately net cash provided by operating activities has decreased dramatically. I do believe it's just due to the overall expense growth that the company has seen. This has also caused free cash flow to be on the negative side for the past 2 quarters. Again, this company is investing a lot of money in property and equipment. They are building some of their data centers to kind of improve the solutions and the experiences for their users. Again, it's not just Meta Platforms investing in the Metaverse. We can see Roblox is doing the same. And if you are enjoying the episode so far, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Also, if you want to listen to the upcoming #1 semiconductor podcast in the world, make sure to follow this link right here where I do weekly videos about the semiconductor market. Here we can see a nice graph showcasing the daily active users, how they have grown 24% year over year and also up a nice amount quarter over quarter. What I think is super impressive is the daily active users by region and age. First, we can see over 13th, which is the the older range group for this company has grown 34% year over year. The under 13 is growing at 14%. So we can see that over 13 is becoming a strong demographic. And they do mention that the largest contributor to growth in engagement was 17 to 24-year-olds. So we can see this is becoming a more older demographic in forms of their player engagement. And what's great thing is usually 17 to 24, they have some form of jobs, so they're spending a little bit more money in a platform like Roblox compared to maybe the younger demographic age group. If we take a closer look at daily active users by region, they're still seeing 17% growth in the United States and Canada. Remember, that is one of their most peak products or peak markets, and they're still seeing growth there. Europe was up 30%. APAC was up 40%, and the rest of the world was up 15%. Hours engaged is also up year over year, 20% and quarter over quarter. This is to be expected, right? If you have more users playing your platform, you are expected to see more hours engaged. Here we take a closer look at hours engaged by region and age. And honestly, what's going to be a little bit worried here. I thought the over or 13th was going to be a very small portion, but this is the one that's actually growing the highest, 31% growth over here. And it is the majority. I mean, it does seem like maybe the older group probably doesn't have a bedtime, doesn't have a curfew, so they're able to play a little bit longer. Hours engaged as well is growing globally. United States is up 21%, Europe up 34%, APAC up 20%, and the rest of the world up 7%. I do want to share the final thoughts. They did give a little bit more insight on the October 2022 key metrics, and they do mention that compared to the first 27 days compared to 2021, the reason they're only comparing 27 days is because last year they did have an outage after those days, so they wanted to do apples to apples comparison. But they do mention daily active users is up 14%, and they also say bookings were up 13% over same time last year, or 20% on a constant currency basis. So we can see definitely a lot of growth happening in this company. The engagement, the daily active users are growing. The age of the daily active users are also improving, and we are seeing better engagement. Obviously, if we take a closer look at those GAAP numbers, they are at a loss at net income, and they do have a negative free cash flow. But if we take a closer look at this company's balance sheet, they have roughly $3 billion in cash and cash equivalents, and only roughly in kinds of long-term debt, they have roughly $1 billion. A good portion of their debt is usually deferred revenue, which in my opinion isn't too much of a liability. So this company has plenty of cash at hands to pay off all that debt and still be net positive, roughly $2 billion in cash. The company did mention that they are seeing positive trends in monetizations, especially the highest monetization regions like United States, Canada, UK, Nordic, Australia, and New Zealand. They are either flat or up year over year, hovering near all-time high achieved during the pandemic. So it's not like many people were wondering that, hey, after the pandemic, a company like this was going to lose a lot of their players. Other investors may be saying that, hey, a lot of the growth is coming from international market. But over here, Roblox is saying that, hey, no, it's pretty much flat compared to a year ago, which is pretty impressive, especially coming out after a pandemic. The final thing I want to talk about Roblox is they do have kind of immersive ads being added to their Roblox platform. They are starting to roll that out in small phases and small tests, and it does seem like it's giving them some form of positive reaction. So it is positive that eventually this advertisement business coming from Roblox will be a huge kind of tailwind for the overall company. So overall, as we saw, the stock price is down a nice amount. This is one of those positions that I personally wouldn't make a number one position or a big player. This is something that would be, hey, a growth stock story where I wouldn't mind dollar cost averaging, but at the same time, always understand that position sizing. There is numerous kind of tailwinds affecting this industry that can overall kind of give great returns. We are still seeing positive reaction in the company's overall products. Obviously, a lot of tailwinds as well, especially with the kind of losses this company is taking due to the overall increase in headcount. So let me know in the comments below, are you kind of bullish or bearish on Roblox at the moment? I can definitely see the case for both. So take care, have a good day, and see you next time.